It's 5 o'clock in London. It's midday in New York, 1 a.m. in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 11:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID livestream series 22, episode 01. That's the first one of the new year, ladies and gentlemen, for 2024. Happy New Year to you all. Episode 127 starts here. Great news from India. According to the NSE, that's the National Stock Exchange of India, CEO Ashish Chauhan, there are now no fewer than 75 million Indian stock investors, including 20 million women. Bit of a way to go on diversity, but it could be a lot worse in some parts of the country. Meanwhile, SEBI has tightened up short selling rules, with Indian stocks hitting all-time highs. There's a spirit of crazed parsimony hitting innovation across the UK-listed markets, where management are expected to indulge in near servitude for the firms they run, or, as is often the case, you pay peanuts and out of the trees, hey presto, a C-suiter swings off a low-hanging branch. Even French CEOs are earning more, 50% more on average, than their UK counterparts. That's comparing the CAC 40 to the FTSE 100. And in the USA, it's at least 3 times. The bizarrest thing is, amidst the reluctance to pay for good management and great entrepreneurs, the same folks whinging about management salaries see nothing wrong in paying millions to watch grown men chase inflated pig's bladders. It's a funny old world. And by the way, good luck to those who can earn any outsized return from any means of entertaining the public, inflated pig's bladders or not. At the same time, a spot-on remark from the LSE CEO, as she says the public need to get over superstar CEOs' salaries. Hear, hear. Meanwhile, there are muddy waters by the Thames as Karsten Block worries about an IPO race to the bottom. Great execution, incidentally, by TMX Group in Canada as they complete their purchase of the remaining 78% of Vetify, which they announced just before Christmas. I wonder what's next under the likely to be dynamic chairmanship of Luc Bertrand. And finally, for this introductory section, well, the good folks at Reuters cracked a delightful scoop the other day with news that Chinese mutual funds can now sell net short. That helps a lot for freeing up redemption pressure in the somewhat volatile and, well, one might say, pressurized hot pot of the Chinese stock market. For today, ladies and gentlemen, our show is the IPO-VID annual review. We're looking at 2023 in Revolution, part 1. You're going to be joining a series of illustrious guests. We'll get to those in a moment, and they're all going to be discussing their thoughts on where the capital market revolution goes next, beginning what is going to be a very, very exciting year, because indeed on July the 1st of this year, that's the 25th anniversary of the publication of the original Capital Market Revolution, written by yours truly and published by the Financial Times. So, without further ado, let's start from the Executive Director at ADGM, Simon O'Brien. He joined us on the 10th of January 2023 for IPO-VID number 89. And that discussion was all about Abu Dhabi Global Market, building an island of excellence. Let's hear from Simon.
If you're an issuer, if you're a broker, if you're an exchange, and you also believe that the nexus of a capital market and an exchange is the very best form of that, then we believe we have the framework for you to go and do that.
Short, succinct, and to the point. What an excellent introduction. And what a year it's been for Abu Dhabi Global Markets as well. Simon O'Brien surmising the fact that they believe that they have got the ideal framework within their unique financial centre in order to allow all manner of markets and market intermediaries to prosper. And indeed, what a year it has been, as I mentioned earlier, the likes of TCI, the Children Investment Fund run by Chris Hone, setting up its first office in the Middle East, operating out of Abu Dhabi Global Market. Where else? Now, moving on, we're still in the Middle East for our second excerpt of today. The Chief Executive Officer of Elam Capital, Les Mail, joined us on the 17th of January this year. He was our guest on IPO-VID number 90, and the discussion was all about developing commodity exchanges with a man who, of course, is no stranger to that process, having been the Chief Executive Officer of Dubai Gold and Commodity Exchange until earlier last year. Les, let's hear from you.
I think that there's a huge opportunity there to embrace that, to educate them, as I've said, and to regionalize it in terms of having a package solution that can really help a sort of more global traveler that we have now.
And there you go. The capital markets opening up a new client class for exchanges, a huge opportunity to regionalize in terms of having a package solution that really help the sort of more global traders that we have nowadays, says Les Mel. Absolutely, completely agree with that. One of the things that's most important is, however you look at Young's pyramid of exchanges, the simple fact of the matter is the bottom of the pyramid is perpetually growing. Great to hear from Les in Dubai. Also lovely to hear today from Richard Cardwell. New Year's greetings to everyone. Thank you very much, Richard. Appreciate you tuning into today's show to hear the words of wisdom that are coming from all around our viewership across the world. So that moves on very elegantly. Our third show that we're going to highlight today on 24th of January 2023 brought Bruce Goldberg, the CEO and founder of Goldberg Group, a VC and angel investor nowadays. He was, of course, the man who was the marketing presence, chief marketing officer, who established the International Securities Exchange with its unique brand and indeed its unique path towards becoming a major player in the US equity options market. Why the world needed a fifth options exchange was the title of his show. When it comes to the capital market revolution, let's hear from Bruce.
I think it goes into the, well, loosely termed the crypto world. I haven't been all that close. I've had some exposure to it. You can see all the, call them exchanges, different venues, failed and otherwise. The nature of an exchange, and there are significant responsibilities, certainly a SEC, CFTC regulated exchange, it's got to go in those, the crypto market has to go into a far more disciplined, regulated, trustworthy arena.
The crypto market has to go into a far more disciplined, regulated, trustworthy arena. We were discussing that a year ago. We were discussing that the year before even Bruce was on the show in BitCarnage, our newsletter all about market structure in the digital asset crypto world. And indeed, unfortunately, we have to mark today's event by noting that in tomorrow's BitCarnage, we'll be talking about the fact that the crypto digital asset industry has achieved a rather sorry benchmark, ladies and gentlemen. It has already exceeded the total amount of fines in the US of legacy finance during the course of 2023, despite the crypto business being a fraction, an infinitesimally small fraction of the overall business of what they rather condescendingly term TradFi. So from Bruce Goldberg, we move on and we go to Alina Aldambergen. Of course, last year I had the great honor of being a keynote speaker at the Kazakhstan Stock Exchange's 30th anniversary conference. What an incredible week that was that we spent in Almaty in Kazakhstan. A joy to get to the country for the first time. Thank you very much for the invitation, Alina. But the end of January, 31st of January no less, in IPO-VID 92, Alina Aldambergen was making the case for Kazakhstan. That's case K-A-S-E. Let's hear from Alina.
Digital technologies are exactly disruptive. So this is something we have to understand, whether the intermediates would disappear, whether the stock exchange has to go in the intermediation. And especially for digital infrastructure, we see that some exchanges actually setting up this kind of brokers and they're setting up custody business. This is a bit different approach, different regulations. We need to understand how the digital technologies will drive this market.
And what an interesting and succinct answer we had from Alina, talking about the intermediary structure of markets, amongst others. There are huge ramifications out there to going digital, not just necessarily going digital on the blockchain. And they continue to be issues that we have to think through every day, because they are disruptive to digital technologies, but nonetheless, the implications can be quite substantial. And I suppose that's a really apt moment to introduce a kind and welcome comment from one of our viewers. Thank you very, very much. I'm not quite sure who that is, but it's a joy to get your message. Great to see a great start of IPO-VID 2024. Good luck, Patrick Young and everyone. Hack the future. It's absolutely a joy to be here hacking the future with the team. And of course, the ultimate hacker of the future, Beata Young's going to be back with her live stream at the same time tomorrow on the same kinds of channels, namely Facebook, LinkedIn, and YouTube. Thank you for that great remark from Beata Young. Who else but my incomparable wife? So, with girl power of forethought from Alina Aldambergen and Beata Young, we move on to the streetwise professor, Craig Pirrong. He was speaking to us on the 7th of February from his base in the University of Houston in the USA. Let's hear from the genius figure of Craig.
perhaps somewhat provocative reworking of that is that the capital market revolution will not be decentralized. That centralization of exchanges, of clearing, et cetera, will continue to be the dominant paradigm for the foreseeable future.
Fabulous insight there. A lot of people talking about DeFi. The CFTC, they issued a report on it yesterday from their technology advisory committee, which rather strangely seems to have a lot of very large blob technology companies on it, but relatively few, well, intermediaries such as futures brokers and other people who would traditionally be regulated by the CFTC, unless, of course, Amazon Web Services are suddenly regulated by the American futures regulator. Not that I'm aware of it. So there are some good practitioners there from the likes of ICE, the CME, and other parties, but nonetheless, it's a strange committee. However, even they have pointed out the issues with DeFi going forward, particularly the identity of participants and who's actually responsible at the end of the day. I think Craig Pirrong's spot on here. I think DeFi does not have a future. Those who believe that DeFi is going to be the future, I believe, may find themselves sooner or later in a cell not unadjacent to the likes of CZ and Mr. Sam Bankman-Fried. Let's see how that works out. Someone who would disagree with me, however, is our next guest, Monica Singer. Professor Monica Singer, she's a chartered accountant, and she was, by training, she was the first CEO of South Africa's CSD Straight. Nowadays, Straight to the Blockchain was her episode on 14th of February last year. She was enunciating an incredible belief in precisely the opposite views of Craig Pirrong. Let's hear from Monica.
I'm a believer. I truly believe in a decentralized world, decentralized finance. The DAOs are going to find a way. And just also remember, this technology brings incredible power, and with power comes responsibility.
With power comes responsibility. Cannot possibly argue with that. There you hear from a true DeFi believer. We're happy to have a broad church of all manner of opinions on this show at all points in time. I can't really see it myself, but who knows? Monica's got an incredible pedigree in this industry, and she's certainly got vast experience in the world of clearing and settlement, so she could well be right. We shall see how these things work out during the course of 2024, and of course, if you want to keep informed about those, then you want to tune in for digital asset and blockchain and crypto-related structure to our daily newsletter, Bit Carnage, which you can find on Substack, is where you will get Bit Carnage, or alternatively, you can subscribe for both the legacy exchanges and market structure world and also the digital asset version by going to exchangeinvest.com. A senior fellow at the Adam Smith Institute, Tim Worstall, was our magnificent guest for the discussion about all manner of surpluses in the world of society and capital. And actually, it was a very, very exciting one. Ignore the doomsters was the message from Tim. What have we got in reserve? Well, let's hear a conclusion from Tim himself.
As long as we're able to motivate and allocate the surplus capital of the society into things that people don't then have to work in themselves, which is the other way of saying very much the same thing, then we're going to continue to advance as a civilization, because that is the essential thing, that we can actually mobilize the savings of the population.
That was the most majestic discussion, I've got to say. If you want to talk about or think about shortages, you want to think about the economics of want and need and everything to do with demand and supply as it relates to resources and more, Tim Worstall was brilliant in this show during the course of last year. I thoroughly recommend you go and catch up with that, because as long as we're able to motivate and allocate the surplus capital of society into things that people don't then have to work into working themselves, we're going to continue to advance as a civilization. What a very apt metaphor for 2024, where a large number of people have been remarkably concerned about what's going on in the world. Have to say, great influx of viewer comment this evening. Delighted to see you. John Falk, I hope you're enjoying retirement, John, and thank you very much for that magnificent pair of booklets that you sent me when I mentioned your dad on social media a few months ago. Absolutely superb stuff about both your father and grandfather. We'll get to them in a future issue of the Exchange Invest Weekend, I'm sure. Really made for great reading as I was flying British Airways at one stage across the skies of Europe during the course of this year. I agree with Craig. There you go. Two voices in favor of Craig saying that DeFi is not going to be the thing. And At the same time, we've got Collin Howard. Hi, Collin. Great to hear from you today. Very professional presentation. Well done. Well, thank you, Collin. I have to say, the staff have been working here. The team, it's been an incredible team effort during the course of the day. And I really appreciate the work that's been going in over the course of the last week from Rushelin, from Janella, and from Racy, who've put together today's show. And we hear from Mary as well. My unforgettable IPO-VID guest was Tim. It's a complicated yet very educational topic. Couldn't agree more. He did so well to manage to put that together. And indeed, last amongst our many people who are commenting today, thank you very, very much for commenting. Do please give us a little heart, a little bit of love, because that helps the AI bots push us further up the rankings. And therefore, hopefully we get this useful educational content seen by a lot more people. So do please like on whatever media you're looking at this particular video right now, whether you're on the live recording with us or at some future date when you're listening to the recording. So thank you very much. Hi all, says Marcus Ward. Great to see you, Marcus. Happy New Year to you and yours. Thank you very, very much for joining us today. And that's made for an incredible cornucopia of comments just to get us going after we had the unique Tim Worstall, who was a super guest amongst the good grief, 42 guests that we had during the course of last year, all of them making their own unique impact. Jeffrey Kutler was our 8th guest of the year. He's the editor at the Global Association of Risk Professionals and produces a great deal of fascinating writing about the topic of risk throughout the course of time. He was discussing his personal journey from ATMs to cryptocurrency through the world of financial technology in IPO-VID 96. Let's hear it from Jeff.
I think that we should look at artificial intelligence and what it is capable of contributing to the capital markets future.
Now, that was February. Does anybody remember what happened a couple of months later? Probably the most presciently correct intervention on IPO-VID of all of last year, and we had many great interventions. That was Jeff Kutler saying, we've got to look at AI. Those of you who managed to read, say, a Sunday newspaper, whether online or in print, during the course of the end of the year will have noticed that there was more or less nothing in the Sunday newspapers except stories about AI. And in fact, actually, EI Weekend last weekend, you can catch it on Medium, you can catch it via Exchange Invest website, exchangeinvest.com. It's free to access the EI Weekend. We had a special edition devoted to nothing else but AI. But we weren't as far ahead of the curve as Jeff Kutler was. He was the man who told us in February that it was going to be a big thing. Speaking of big things, it was absolutely fantastic to get Professor Albert Menkveld. He's the professor of finance at the Free University of Amsterdam. He joined us in early March for IPO-VID 97, discussing non-standard errors in markets. Let's hear from Albert.
When I think about these things and the theme that we're covering today, we look at 10 years from now, what research is going to be like. We're not doing research anymore on little machines, these MacBooks, etc. There'll be clouds with repositories of data, but along with those clouds will be code that analyze this data, certified by different researchers, like that as the most appropriate way to go about analyzing a particular question.
Very interesting. Clouds of repositories of data, the way we're going to be looking to this in the future. And of course, that lets us all think about the fact that is a major data play like the London Stock Exchange Group sensibly positioned? Does it have its clouds in the right formation? Are they, I don't know, the cumulonimbus of pixels or something that are going to be able to be exploited by that in the future? It's certainly a very, very interesting discussion. His non-standard errors was a very dry academic topic, which he brought to life as only Professor Albert Menkveld can. Thank you very much also to John Falk. A lovely message. Thanks, Patrick. The best of 2024 for you and Beata. The same to you and yours, John. I hope that we'll maybe get a chance to meet up at some point in time. Certainly if I make it as far as Belgium, I'll let you know during the course of the year. It would be great to catch up with you. Thank you so much for your kind words and support during the course of the last year. As I say, I hope everything's going well in your world. Now, amongst the many strong and wonderful women we had on the show last year, we had Jennifer Ilkiw, the president of ICE Futures US. She was discussing how ICE was cresting the derivatives wave. That came from the Boca Raton Resort, from the FIA conference, which was ongoing at the time. And let's hear from Jennifer.
It feels to me that the environmental markets and the growth that we're going to see in different products, whether it's like the auctions that we do or different carbon credits, carbon allowances, all this change that's going to happen, it's going to be unique and different.
Unique, different, emissions, carbon. We're going to be hearing some more of that, but you're going to have to wait for part 2 of this show, which is coming up in 2 weeks' time, ladies and gentlemen. There's a cliffhanger for you all. Very interesting. The growth of the environmental markets. Obviously, Jennifer Ilkiw, the head of ICE Futures US. We also have in the past had excellent guests from the ICE specific emissions organization, none other than Gordon Bennett himself, who was a major participant in that. And indeed, ladies and gentlemen, I would say that on the climate change issue, in many ways, some might see that it's a new ice age. And I don't mean that's the weather pattern of the prevailing on the 48 lower states of the United States of America at the moment, although things are rather ugly and stormy on the horizon there. Hope everybody's okay during the course of that inclement weather. What I'm talking about is something that'll be in tomorrow's Exchange Invest newsletter, the newsletter of the Bourse business, the exchange of information. And you can catch up with that. Subscribe at exchangeinvest.com. You can actually get tomorrow's issue for free because we'll give you a 30-day free trial if you'd like to have a look. But we're going to be talking all about the new ice age. And the new ice age, I suppose, is somewhat linked in with our finance book of the week, because this week we're looking at a rare classic. It's well over 20 years old, but nonetheless, it remains, I think, the best ever history of the world of risk. Against the Gods by Peter Bernstein, which hopefully will come on the screen. Ah, yes, there it is. Was a unique tome by a very, very serious writer. It's a comprehensive history of man's efforts to understand risk and probability, beginning with the early gamblers in ancient Greece right up to modern chaos theory. Peter Bernstein does a sensational job trying to demonstrate how understanding risk is underlying everything from game theory to bridge building to winemaking. That was 20 years ago, but nonetheless, it remains a very, very apt topic of conversation to this day, ladies and gentlemen. That's our book of the week. The book of the week is published on a Saturday, an Exchange Invest weekend. So therefore, if you want to read that, as I say, it's absolutely free via exchangeinvest.com. And don't forget, of course, that it will then be announced on this IPO-VID during the course of the following Tuesday. Talking about Against the Gods took us all the way back to ancient Rome, ancient Greece, the very original theories being built about risk and all of its concepts. And that rather links in neatly to the guest we were able to join us in March, on the 21st of March, no less, the Secretary General of the Malta Numismatic Society, Collin Formosa. He talked about Maltese money and more, a great deal more, although nonetheless, it was fascinating to see Malta, a country which has been conquered by so many different organizations, entities, and indeed nations over the course of years. It's had a series of dynamic interventions in the coinage market before trying to sell itself as a blockchain island, of course, much more recently. That was a fascinating topic of conversation, all about numismatism. Let's hear from Collin.
When I think of markets, I somehow think of 1001 Nights under Aladdin's lamp. And at one point, Jafar comes out shouting, "New lamps for old lamps. Give me your old lamp and I'll give you a new lamp." And that's what I do with my money. I give out my new money and I get old money in exchange.
Well, there you go, ladies and gentlemen. Somewhat of a, let's say, certainly someone who thinks that the good money is the stuff to be found historically. And in that sense, good money is driving out the bad modern money, in his sense, in a reverse of the Copernico-Gresham's law, I suppose, in many senses. Collin Formosa, the Secretary General of the Malta Numismatic Society, joined us in the middle of March, all the way from, indeed, the island of Malta. Coming from the University of Michigan, was a psychiatry resident, one James Block, at the end of March, 28th of March last year. He was in our centenary issue, IPO-VID 100, examining Dirty Bubbles. And therein's the clue to why James was on the show, because he's the man behind Dirty Bubble Media, which, of course, was an organization which was in the forefront of calling out the wrongdoing at places like Binance, FTX, and a multiplicity of other crypto platforms during the course of the last couple of years. Let's hear from James.
I do think that the idea of tokenizing assets has some merit. And whether it's done on a blockchain or some other means, I think that making it easier to transact and move securities around between individuals and making there be less barriers between these various markets would be a good thing. Again, though, it has to be done in a way that complies with regulations and, environmentally friendly and actually efficient.
Environmentally friendly, one of those issues that's still a problem, particularly for the Bitcoin blockchain to this day. And yes, the possibility of merits in digital assets from somebody who's been highly skeptical of the, well, rather criminal tendencies, unfortunately, to decentralize a fool from his money over the course of the first version of the crypto era. Moving on from James Block's excellent show number 100, in 101, it could have been the Hindenburg, but actually it wasn't a Hindenburg moment. It was something much, much better indeed. We had Bob Pisani, veteran reporter of CNBC. He was talking to us about his book with the memorably fantastic title, Shut Up and Keep Talking, a history of therein a famous incident when he was told such by his producer. Well, coming from his office on the majestic New York Stock Exchange floor, just off it, a couple of corridors away from the heart of Wall Street, let's hear from Bob.
It's going to become even more electronic. Artificial intelligence is going to become a very important part of it. There will be new products out there. People ask me about what's going on with crypto, and I have a very simple answer to this. I am a huge believer in blockchain. I am a huge believer in the concept of decentralized finance. I think that there's tremendous potential there for real estate transactions, for transferring money, for stock clearing in the blockchain.
A big advocate for blockchain, something very, very exciting there. And the decentralization of finance is also mentioned, interestingly, by Bob Pisani. And that leads us to move on. It was great to have the guest from the illustrious CNBC newsroom. He's been with us for so many years on our screens. It was great to chat to Bob Pisani during the course of last year. Jimmy Oliff is someone who's been around the futures and exchange business for a lot longer still. He is a former vice chairman of the CME, the Chicago Mercantile Exchange Group. His father, Herschel Oliff, had a very, very long-standing relationship to the Merc as well. And he was also inducted into the FIA Hall of Fame, absolutely justifiably so, during the course of last March's Boca Raton FIA conference. We spoke to him just a month later after that, having been a member of the CME board of directors for some 30 years, but more recently retired therefrom. Markets and electronic transition, from somebody who was a pioneering advocate for digital electronic markets right back in the 1990s. Let's hear from Jim Oliff.
The capital market revolution will continue to evolve, but regardless, it's always going to be based upon what I call TLC. And TLC is not tender loving care, but rather in the capital market world, it's transparency, liquidity, and creditworthiness. I think that market structure is always going to require liquidity providers. It's going to require end users and intermediaries. Creditworthiness, to me, will always imply custodianship of funds and instruments and some sort of financial guarantor to the entire process that stands behind each transaction.
As befits a man who actually helped create, as chairman, the CME's European clearinghouse a decade or so ago, obviously a lot of impact upon the importance of not just the intermediaries, but ultimately custodianship there for Jim Oliff, and a very, very valid series of points he makes as well about TLC, transparency, liquidity, and credit. It was a joy to have Jim talking to us from his vantage point of all things that have gone on in the windy city of Chicago for the course of the last 30 years or more. We then were joined in our subsequent episode, late April, actually, 25th of April, by Alex Lamb, the head of Americas at Skila, discussing that ever hot topic from, well, against the gods and beyond, real-time risk. Let's hear from Alex.
I actually see barter markets. Why do we continue to transfer an asset between two assets when we could just transfer the asset ownership efficiently today using technology? So I think transferring assets without necessarily having to involve cash or tokens could be the next step. There you go.
What an interesting concept. Barter making a comeback in an era of digital financial transactions. That was the argument from Alex Lamb, and a very, very strong one indeed, I think, because particularly the opportunity using different proxies, it's quite feasible that we can manage to get a real-time market for everything. So therefore, why cannot we much, much more smoothly transact across exchange platforms? What's important about that? I think the important thing about that is the fact that we still see platforms, exchanges, marketplaces as being at the centerpiece of everything. And that's one message that I think is very important for all of those of us who've been caught up in the groundswell of the capital market revolution for the course of the last 25 years. It's the topic of the fact that what is the incredible, amazing, epicentral model of e-commerce, of digital commercial interaction? And it is, of course, the exchange, ladies and gentlemen. Some call it Airbnb, some call it all sorts of other names like Mercado Libre in Argentina or eBay or whatever you want to call it. But the truth of the matter is, just like, well, those people who are delivering you pizzas via all manner of different agencies at this juncture in time, various taxi apps, Uber and so on, they're exchanges. So thank you very much to Alex Lamb for his intervention. And then moving on, we were revisited by the absolutely magnificent Rainer Zitelmann, serial best-selling author, 26 books, including In Defense of Capitalism, which have been translated into 30 languages around the world. 2nd of May, 2023, how apt, coming just after Pan-European Day of Indolence, the day when all the socialists of the world get to celebrate. What do they get to celebrate? I mean, May the 1st, it's totally confusing. But Rainer's going to talk to us.
So many stupid people to have some artificial intelligence, but I don't know.
People speak a lot about artificial intelligence, and maybe it can help if you have so many stupid people perhaps have artificial intelligence, but I don't know. What an interesting thought. In other words, at the same point in time, ladies and gentlemen, technology remains exactly where it's been for so many decades, because of the simple fact that if it's garbage in, it's garbage out. And therein stands, of course, several hundred different copyright cases that are going on at the moment as the engines of AI are desperately trying to suck up other artisans' creative content. Fabulous altogether to have Rainer Zitelmann on the show. He really is a fascinating defender of capitalism in so many different ways. And then we got to Philip Roscoe on the 9th of May last year. He was talking about how to build a stock exchange, more from the empirical sociological approach. He's a reader in management at the University of St Andrews. Let's hear from Philip.
Environmental degradation, inequality, carity, all of these kind of things. And I think that stock markets are going to be a crucial, in all shapes and forms, going to be a crucial part of enabling us to tackle these, because they're going to need money. And the one thing that the historical trajectory of markets shows is that they're good at funding stuff. And you funded railways, they funded canals, they funded .coms and so forth.
Funding, the big gap. Why we're in the exchange business in the first place, ladies and gentlemen. I look forward to developing more markets during the course of this year. We've got some very, very exciting plans already underway. What is going on? The truth is, nothing is better at managing to suck in investment dollars or investment pounds or pesos or whatever it may be, even barter currency like gold, perhaps, as Alex Lamb was talking about, than marketplaces. And that was the core epicentral point to the future of the revolution via the thoughts of the reader in management at the University of St Andrews, Philip Roscoe, discussing how to build a stock exchange. From someone who was analyzing how to build a stock exchange, we were back to another excellent former director of the Chicago Mercantile Exchange Group, Jeffrey Carter, a partner at early stage VC, West Loop Ventures. He was discussing his incredible arc trajectory of life from the Merc floor to angel funding from his glorious idyll, I do believe, out in Las Vegas. Let's hear from Jeffrey.
You're going to see markets become way more efficient, especially in supply chains. There's markets out there that right now function, let's say in barter, or they're very inefficient, that are going to be made much more efficient, which is going to promote more gains from trade, raise standards of living. Things that are highly regulated today, like water, like electricity, when they transition to a free market system, will become more abundant and more efficient.
Well, great advocacy for markets, for the exchange model there coming from Jeff Carter, and also the fact that ultimately these sorts of efficient markets raise standards of living because they're accessible to everybody and the product they produce is accessible to everybody. A very, very key market from floor trader in the Eurodollar pit turned pioneering VC, a partner at early stage VC Westloop Ventures, Jeffrey Carter. Then we got, ladies and gentlemen, to an exciting show where we're looking at the AFM, the Association of Futures Markets, that fabulous organization that deals specifically with markets, marketplaces, and exchanges, which are in the emerging markets, particularly with the derivatives bent. The president of the AFM, Paul Constantinou, was one of a pair of guests on a doubleheader on the 23rd of May on the topic of the 25th anniversary of the AFM itself. Let's hear from Paul.
It has definitely got to continue harnessing technology, making sure it's making the best use of available technology and not to be afraid of experimenting with it. I express a concern on AI, but that's me generally. I do express concerns about AI. But, you know, it's there. The blockchain type of stuff is there. And I think it's almost beholden on the capital markets to try and harness that, because all powerful stuff, and if they can make for a more efficient marketplace, then I think it's to the benefit of everyone.
Again, discussing the efficient marketplace, something that was being talked about by Jeff Carter just a few moments earlier amongst our other guests today. Very, very opposite points from Paul Constantinou, who, let's face it, spent a long part of his career selling technology. At that same show, we also had the chairman of the AFM discussing AFM 25 years on. Let's hear from CQG Vice President Pat Kenny.
I think it continues to go the way it's going because it's so healthy. And I think we had some really big tests, didn't we, through the pandemic and the amount of volumes that were being cleared during those days.
Volume, how incredible it was during the course of the pandemic. Of course, we had those multi-billion message days that were taking place across multiplicity of stock markets in the US alone. And that made for very exciting times. But nonetheless, the markets worked even when they were being run from home, while people could sit at home, stroke the cat, do all sorts of domestic things, and also ultimately make sure that the world's markets were running freely and very, very efficiently. Efficiency, a big issue at all points in time, and a continuation to the revolution going on from the eyes of a man who is in the catbird seat from his position at the recently bought out by management CQG Inc. Then we get to what's going to be our last guest of part one of this show, Gedon Hertshton, founder of the Hertshton Group. He's someone who has played a pivotal role in markets across the Atlantic, certainly the development of the financial futures and options markets over the course of a couple of generations, from the very pretty much foundation of life in the relatively early days of the Chicago pits trading financial products, certainly. Gedon, founder of the Hertshton Group, he was with us on the 30th of May 2023 for IPO-VID 108. His topic, markets for the next generation. Let's hear from Gedon.
We may see further integration of the DeFi solutions moving into our markets. That's what I think we'll see some of this solution, like blockchain and all those things, this new technology moving into our markets, the traditional markets, and affecting our markets. I think that might happen. I think also another thing that I think we'll see maybe more harmonization of the regulation between different countries. I think the regulation will move in the same way, for example, tax situation in different countries. They change information and they try to close down the tax havens and so on. I think things like this will happen in the regulations also, and they will have an amazing effect on our markets. Those are the things that I think. Knowing, I don't know for sure.
Once again, the possibility of blockchain being a major feature of the clearing and settlement of markets there from Gedon. Gedon was coming to us, of course, from Israel. Our thoughts are with Israel at this time after those horrible attacks on the nation by terrorists during the course of October last year. I hope you're well, Gedon. It's great to have had you on the show during the course of last year, and hopefully we'll be able to get to Israel soon in order to manage to see the wonderment of the Israeli economy in action. Gedon, founder of the Hertshton Group, a really, really exciting, dynamic business which has occupied all manner of different silos all the way through to property nowadays, coming from an original financial markets, a futures and options markets base. We have a very interesting question, actually, just to follow up on some of the topics. John Falk has asked, how will exchanges like the LSE defend their market against other larger exchanges taking the market for IPOs? Isn't that an interesting question, John? I noticed there was a piece of research that came out yesterday from, I think it was Peel Hunt, the broker, which seemed quite weird. They were suggesting that out of protectionism, you should forbid companies that are already listed on the LSE from listing elsewhere without permission. Now, that strikes me as utter madness, because that basically breaks down the whole concept of why the City of London over more than 1,000 years has become the world's most cosmopolitan financial centre. But nonetheless, it's a huge worry. How do you make IPOs work better? I would agree with Carsten and Bloch's remarks of last week. It's not just by having some sort of crazed race to the bottom in terms of low standards, because certainly we can see already how that causes some difficulty in small or medium enterprise stock markets and other platforms where there can be a lot of shonky behavior going on. So what is the ultimate solution here? Well, actually, I would turn the thing on its head. And funnily enough, while I'm a huge critic of the current UK government, although admittedly, is the opposition any better? Go figure. Thank goodness I don't have to vote in the British elections this year. That's all I can say. Look, what I would say about this whole topic, John, is here, and actually the Finance Minister of the UK, Chancellor of the Exchequer, Mr. Hunt, has come out with a comment about this today, which I think is very clever. He's looking at trying to create some sort of specialist funds that can invest specifically in UK IPOs and things. And I think that's key, because there was a great article actually in the Brussels Bugle, the Financial Times, towards the end of last year. They were talking about how the United States of America succeeds. And the United States of America succeeds because of the wall of money. I think a lot of people look too much at the tweaking of the financial infrastructure and so on. And sure, we have to keep up with the trends. We have to do the best possible thing to make the markets efficient and so on. But I don't think that's the failing of the London Stock Exchange. Although it would be good if their operating technology would stay a little bit more upright than it has been doing in the course of the last 6 months of last year. However, the whole issue, for me anyway, is how do we manage to make that market better? I think the truth is you have to say there's a wall of money there. The biggest worry in the UK at the moment is that the financial investors, the fund managers, have been risk off. They don't like innovation. They don't like taking risks. They've essentially been interested in the same old boring stuff. And actually, that's why I think we need more of a risk-on attitude in terms of the City of London. I think for the City of London as well, we need to try and find a way to get out of the graduate training scheme monopoly, where we're ending up with all sorts of people thinking in the same direction. We need to get back to the innovation of the 1980s, where people can manage to think out of the box. And we get, well, lots of the people who've been on this show, ladies and gentlemen, were allowed to prosper through those regimes. The floors of the CME, the floor of life, such as Gedon Hertshton initially prospered on. Those are the sort of things we need to do to get more entrepreneurial in the City of London and add to the risk culture. The fund managers need to have greater risk. And at the same time, if the Chancellor of the Exchequer, now that he's outside of the European Union, curiously, this is something he could do, can he create some sort of mandate to manage to make sure that a lot of funds get pushed towards the London stock markets? Because one of the things that really annoys me about the media is that all they talk about is the London Stock Exchange, when of course there's a cornucopia of stock exchanges in London, not necessarily the London Stock Exchange itself. And that becomes a very, very important thing, because if we have a wall of money, that wall of money can, I think, find a lot of IPOs who are going to see that money as something that they will find very, very useful to take as investment. And certainly where the US is succeeding at the moment is that incredible wall of money, for example, in the ETF business. And let's face it, ETFs are barely 25 years old. I think there's something like only 12 years old in India, if I remember something I read just the other day. But they, really, they were looking at index-linked tracker funds, and they didn't really even have the ETF moniker as such, more or less, in popular usage 25 years ago. They've become the killer 500-pound gorilla of this market, and the USA does it better than anybody else, which is why they've got a lot of surplus funds washing around that will potentially invest in new companies. So I think the key is to make sure you have a wall of money. And of course, where did we see this work very, very well? I don't want to go into European Union bashing, because I know why the European Union did this. But if we look at Poland, 50% of all money in pension funds had to be invested in the Polish stock exchange. That was a genius move by Leszek Balcerowicz when he was the finance minister of Poland. at a point in time when it has to be said, several people had passed over the job because they thought it was basically a career-ending death knell to anybody who wanted to take it. Balcerowicz picked up that cudgel and he did incredible things because he really made the Warsaw Stock Exchange a primary listing venue in the whole of the Central Eastern European market landscape, a uniquely successful $500 million business it remains to this day. How did he do that? Because, of course, he promised the entrepreneurs, he promised the companies there would be a wall of domestic money there by saying 50% of all money that was in pension funds had to be invested in equities that were listed on the Warsaw Stock Exchange. Unfortunately, the European Union said, oh, you can't do that because of single market rules subsequently. And I understand why the European Union said that. But the UK, Brexit, you know, whether you agree with it, whether you don't agree with it, the simple truth of the matter is there's nothing to stop the UK implementing a similar sort of rule now. I think it would be good for pension funds. I think it would be good for investors. And I also think it would actually be good to shake up the investment funds who've been incredibly risk off, as I mentioned earlier. So those are some of the thoughts that I would say about how those sorts of larger exchange groups like the London Stock Exchange can manage to defend themselves. And also, finally, specifically to the London Stock Exchange, I would say it would really be good if the management would spend a bit more time on being a pro-capitalist, pro-free market business that actually operates those markets with, well, every possible element of forethought during the course of the day, rather than waking up with data Tourette's before deciding sometime later in the day to maybe spend a few minutes thinking about their markets. The London Stock Exchange Group, I think, overall has lost its way, but certainly the London Financial Centre needs to re-find its mojo. Ladies and gentlemen, that was rather a long soliloquy from me, but it was a great question from John Falk that I really appreciated. Thank you very much. However, we have reached essentially the end of this Part 1 annual review. It's been a great opportunity to hear from Simon O'Brien, Les Mail, Bruce Goldberg, Alina Aldambergen, Craig Pirrong, Monica Singer, Tim Worstall, Jeffrey Kutler, Albert Menkveld, Jennifer Ilkiw, Collin Formosa, James Block, Bob Pisani, Jim Oliff, Alex Lamb, Rainer Zitelmann, Philip Roscoe, Jeff Carter, Paul Constantinou, Pat Kenny, and Gedon Hertshton. You can manage to catch up with all of their full shows. Just go to wherever you've been watching this on Facebook, LinkedIn, and YouTube. Look for IPO-VID, and we have archived all of those shows for you, so you can go through each and every one of them if you'd like to. Thank you very, very much to all of our correspondents today. Absolutely great to have your input. Thank you, and again, a happy new year to you too, Richard Cardwell. Great to see you. Thanks, Jeff Kutler. It's fabulous to see you in the show, as well as making such an excellent position on the show as such. Did I miss out what you said earlier on? I do believe I may have done so. Oh, we'd better get back to those. In fact, we missed several comments during the course of time. I'm terribly sorry, ladies and gentlemen. It seems to me that something had a gremlin in here. So we had a wonderful AI comment. Thanks, Patrick. The best of 2024 to you and June. I'm just hitting the wrong button here. LinkedIn user was asking, will you be replaced by an AI avatar, Patrick? I don't think it'll ever be possible. Well, who knows? It would certainly allow me a little bit more off time. I suppose it would be really, really useful. It could happen. Jeff Kutler, I may have been a bit prescient on AI, but full disclosure, I've yet to use ChatGPT. Thank you very much, Jeff. Here's to a great year ahead. Yes, here's to a great year for you too, my friend. It's really, really lovely to hear from you. Thoroughly appreciate the input. And I am sorry, once you get past the issue of privacy, I agree that clouds of data are the future. Whether exchanges or CSDs or it is the way. I would agree. I mean, cloud has certainly got to be a huge thing that's going to be coming up there. I think that's going to be a fabulously interesting issue to deal with going forward in these markets. And we're certainly going to have, well, a lot more debate and discussion on IPO-VID during the course of the next year. I know we've already got one or two guests lined up from the CCP side of things. Hopefully you can add a few CSD folks as well to talk about the future of that. And indeed, we have a wonderful comment here. One of my highlights was meeting Jennifer Ilkiw. Says, Woman on It. Don't forget, Woman on It will be here tomorrow, midday Eastern time, 6 p.m. London time, 6 p.m. European time, 5 o'clock London time. You can manage to watch that show with the brilliant Bata Young. One of my highlights was meeting Jennifer Ilkiw. What a great role model to the parish and beyond. Thoroughly agree. And actually, she's a great backbone figure on that CFTC Technology Advisory Committee that I was talking about earlier as well, Beata. So Thank you for that. I'm terribly sorry that I seem to have missed a couple of comments. Albert Menkveld's going to have the last word for today. Thanks for the review and a happy new year. Albert, all the very, very best to you too. I wish you a very, very happy new year, a great year of financial academia, and I hope it's highly profitable for one and all. So, our next show coming up next week, we're going to make you wait for part 2 of this annual review. That's coming up in 2 years' time. 2024, we're going to be looking ahead. We've got 2 fabulously different viewpoints coming up. They're going to each lay out their stalls next week of what are going to be some of the interesting hotspots in markets for investors, traders, and indeed market operators to be aware of when they may need extra bandwidth. Susan now at Gedon, that is the brilliant astrologer that we had on the show last year. Susan's going to be back to talk about those sorts of trends during the course of this year. And Ira Harris, joy to meet the famous former CME board director. I know he's off recording at the moment or tomorrow another podcast with the brilliant Mark Faber. I hope that goes very, very well. I'm sure it'll be an epic show. I wish we could manage to have a show like that indeed. And sometime in the future, we'll get to Asia and hopefully get Mark Faber on the show. It would be absolutely marvelous. That's going to be looking ahead. That's next week at 6 p.m. CET, midday. My name is Patrick L. Young. All I want to say at this stage is huge thanks. It was a super smooth show, and I really, really appreciate the input of our production team today who did all the hard work. The blood, sweat, and tears crew were Janella, Rushlin, and Racy. Thank you very, very much for making it such an easy show. Thanks to all of our correspondents. My name is Patrick L. Young. As always, I'm out there building markets. Let me know if you need anything built for you at this point in time. We're always interested in ways to develop and advise on developing further the world of exchanges and markets. And if all else fails, don't forget,